$50,000, no credit check. All right, guys, in today's video, we're going to talk about the Stripe Capital Loan. We're at the Stripe website here. So basically what this loan is very comparable to, it's essentially the same, but I'm going to go down every data point as a Square loan. So this is basically a loan based on your sales. So I'm going to talk about how it all works. So you have to be processing. You have to use Stripe as a payment processor, merchant processor. Basically, a processor is someone that you use to accept credit card payments online. So, or in a brick and mortar, like a payment processor is where you're allowed to accept credit cards. They process the payment for you. They charge you a fee for using their service. So Stripe is used a lot for like e-commerce. Is used a lot for like online businesses. It's a very popular merchant processor, payment processor. So what you would do is you would create an account. You would have to have at least, and I'm going to talk about the data points, but this is like an example of how it would work. So the way it would work is you're processing payments. Let's say you have a $15,000 loan. The loan fee is $1,500, and then it's 9% of sales toward that repayment. As an example, if it's $20,000, you get a $2,000 loan fee. That's basically their origination fee, and it's 12% of sales towards the repayment. So if you're doing $1,000 a day, it would be $120 towards that repayment, and then you have to meet a minimum of every 60 days as far as what the payment will look like, and I'm going to talk about that. So how it's determined, you have to have a business with at least 6 months of processing history before you get pre-approved for an offer. So they have to see how much you're processing and see if you would qualify to get an offer. And then this doesn't require a personal credit report. This is based on cash flow. This is based on how much you're processing using Stripe, like how much transactions you're processing. Now, this is reported to the Small Business Financial Exchange, so it does help build business credit. Now, again, I'm going to talk about something at the end, at the bottom as well. So once you accept it, you'll get the funds within 1 to 2 days. Again, this is based on how much you are processing, and this is how the repayment of the loan works. So the total amount you owe, and plus your loan amount plus a fat fee, you won't pay any interest or any other fees. So you'll basically know how much you're borrowing, what the cost would be. And how does the repayment work? They collect a certain percentage based on the Stripe sales. And then also you can pay the loan off early if you wanted to, and then you might get another offer. And this is the part where the payment, what is the minimum? The minimum amount you're required to repay every payment period. Stripe automatically deducts a percentage of your sales. And then if you don't, if it'll go based on your sales. So if you have a slow day, it'll take whatever that percentage is. If it doesn't cover that, then they'll automatically deduct it from your bank account. So just keep that in mind. They will deduct it from your bank account. If you satisfy the minimum, we will continue to hold repayments for your daily sales. Let's see here. So this is important. So the Stripe Capital File UCC1 financing statement. So on the business side, lenders that lend out money, give you loans, they can do a UCC filing. Basically, it's like a lien on your business if you took out a loan. So you won't be able to get other funding if you default on that loan. So this is what they're talking about is the Stripe Capital Borrower Agreement includes security interest taken as collateral for your loan. A UCC1 financing statement may be filed in connection with your loan based on several factors, including the size of your loan, facts, circumstances about your business, and other considerations. And then it says, what is a UCC statement? A UCC1 statement is a publicly available notice filed by a creditor that secures the creditor's interest in certain assets of a debtor. Creditors file UCC1 statement with the Secretary of State, where a business debtor is incorporated at the time a loan first originates. So how do I get a UCC filing release at the Stripe Capital? So after you finish paying off your loan, you have to request to terminate that UCC filing. Basically, it's just it's like a lien on your business if you took out a loan, because they're afraid that you might default, and then you took their money and you're trying to get another loan. You won't be able to because you got that UCC filing. You got that lien against you. So just keep that in mind. A lot of people don't know about that. If you borrow loans and sometimes lines of credit, creditors can put a UCC filing on your business, so you won't get any other. You're still responsible for that, and you won't get any underfunding. Guys, don't forget to subscribe. Hit that bell notification. That way you can notify whenever I post a new video. Also, smash that like button. Smash that like button. That's my time. My name is Toby Rosario. Peace.